Welcome to this special budget edition of Inenco's Energy News Update. Alongside the announcements about taxation, benefits and economic forecasts were measures with specific impacts for energy suppliers and consumers. To talk us through the key measures, we're going live to Michael Allen from the Energy Trading team.
Thanks, Katie, and good afternoon from Downing Street. Well, this year's budget was heavy on the party politics, but one of the more substantial announcements was designed to accelerate development of the low-carbon economy. The new Energy Investment Bank will use £1 billion of public money along with an equivalent amount from the private sector to get these projects moving. The Chancellor said the EIB is going to focus on major projects like offshore wind power and low-carbon transport. Government is hoping that by providing initial investment, large investors will follow suit, providing the huge amount of capital required to deliver energy security and carbon reduction. But there are some big questions that need to be answered. At £2 billion, the total fund is tiny compared to the total scale of investment required, estimated at somewhere between £200 billion to £400 billion. So it's obvious that the government is expecting a queue of investors to provide the rest of the funding. Whilst there are encouraging noises from venture capital organisations and support from environmental groups, will it be enough to draw in the big money? It's a big question. What's less clear is the impact on energy prices of this type of financing. Investors, of course, will be looking for strong returns in short timescales, and delivering these sorts of returns is likely to push energy prices up.
But this must be welcome news for the renewable energy sector, though.
Well, remember that the projects the EIB will support are expected to be large-scale, so this won't really help smaller investors trying to secure funding for embedded renewable developments. And the final issue is around timing. The government has said that it will fund its contribution through asset sales, but these take time, and finding buyers at a time when we're still coming out of recession may be difficult. It could be some time before the EIB really gets going.
What help is there for smaller renewable projects then?
Well, there wasn't anything too specific, but the Chancellor did spend quite a bit of time talking about business bank lending. Lending to businesses has been dropping in recent months despite the targets for the nationalised banks. Although Alistair Darling said that there would be a lending target of £94 billion to smaller businesses, decisions made by DEC will make it hard for renewable projects to get funding. The impact of the banded rocks that were supposed to support developing technologies like anaerobic digestion has been watered down by uncertainty about how long they'll be given for. This issue, known as grandfathering, means that banks are only basing lending decisions on the assumption of one rock per megawatt hour, not the supposed multiples. If this increased lending is going to support renewable projects, the grandfathering issue needs to be resolved, or the banks will have to be much more flexible about their lending rules.
Mike, the Treasury has also been talking about the long-term future for energy. How does this fit into the budget?
Well, that's right, Katie. We've been waiting for some time for the government to release its energy markets assessment, which looks at whether the current market structure can deliver the long-term carbon reduction targets. What they've said really puts the EIB in perspective. The report says that meeting the targets will require an unprecedented level of funding to provide massive increases in generation. These increases come from growing use of electricity for both heating and transport. It's difficult to put a total figure on the costs, but they will probably run into the trillions. These figures simply dwarf the £2 billion fund of the EIB, even if it mobilises lots of institutional investors. The report also shows that the government believes that low-carbon generation will need long-term subsidies over and above the carbon costs carried by conventional generators. They have, however, ruled out the proposal made by Ofgem to renationalise the energy markets.
So overall, has it been a good budget for energy?
Well, it's a start point. There are clear signs that government is starting to catch up with the scale of the task to provide secure low-carbon energy, but the response so far is still pretty limited. And there also seems to be an acceptance that the burden of the investment will be passed through as higher prices. With the rest of the budget pointing towards a new period of austerity, rising energy costs are going to cause further pain for consumers and businesses alike.
Thanks, Mike. That's all that we have time for in this budget special, but we'll be returning to look at the progress of these initiatives in future programmes. For now, thank you for watching and goodbye.